and good evening. This is the Elliott Wave update for the S&P 500 for Sunday, January the 30th, 2022. The globex session initially opened higher, and then the sellers moved in. And we're continuing to see some fairly good selling, more in the Dow and in the NASDAQ than necessarily in the S&P, but the S&P is moving nicely lower. And let's kind of dive in and see what took place on Friday, how that all fits in, and what some expectations might be for tomorrow. Initially, I'm going to just give a quick review. We remain in the process of tracing or tracking a minor degree 5 waves down. That remains in place. Exactly where and when this 4th wave is complete or not complete remains a little bit questionable, but the picture is getting a little bit clearer as we come into the globex session that started about an hour ago. Okay, so I'm going to go ahead and open this up so we can see that I'm still leaving the labeling as completing all the way up to a cycle degree wave 5. And on top of that, I am going to put a super cycle 3rd wave on top of all of these completions. So we have reached that level, and I do believe we're in the initial 5 waves down on the hourly chart. And that'll form an intermediate degree 1st wave. So right now we're in a minor degree decline, and that should then, the 5 waves should then complete the 1st wave down on an intermediate degree. And as I've stated before, whether that's going to be a wave 1 or an A wave, yet to be determined. I will initially likely label it intermediate wave 1. Okay, what happened on Friday? Well, we had our Friday expiration. It tended to be more towards the bullish side than it was to the bearish side. And that kept alive the possibility that this minor 4th wave was still in progress. And as I had said on Thursday, we run the possibility that we had 3 waves up. That was the first ABC structure. Then this seemed to look and count best as an ABC. That can change. And that would have made an X wave, which would produce a more prolonged and complex corrective structure. And if that's the case, then this is wave X, this is A, this is B, and then we're in the C wave, which may, if it continues to break down, that's it, it's all done. And then without breaking this high at 4,444, I'm going to revert back that this is the completion point for the minor 4th wave. This is wave 1 of minor 5. This is wave 2 of minor 5. What would break that is if it can get itself above this hourly 200. Now, it came up and gave it a good little shot just an hour ago as globex opened and failed, and then it dropped back down again. We still have the Asian markets to come online, and then we still have the European markets to come online. And so we have to continue to leave open this potential that this is back. So now I'm going to at least present this upside view of what could happen and what we can expect should it occur. Now, if it gets to break above this hourly 200 at 44.27, I would suspect that we're going to start to see some acceleration to the upside because it's breaking through a value area, and then the buyers are going to be out there searching for value on where they can get orders filled. So it should pull in more buyers. And then I would expect a move back above 4,444. Too many fours. So what can I expect off of that? Well, we have resistance at 44.76, resistance at 43.58. It could, on a really serious push, get up to 45.84. Now, on Friday, the S&P did move over 100 points. That was a strong move. Now, and I want to continue to reference that because to see it again, people would say, is that possible? Yes, it absolutely is. It can do it again. And in that case, it's going to end up at 45.27. It's going to end up around here. It's the 618 level. That is all a possibility. Now, we can throw some additional Fibonacci on that. And if we're looking for, well, I really can't, it kind of becomes a little bit more complicated, but what I'll try to do is if I put it from here, yeah, I'm not going to, I'm just going to stick to what we have on the outside. And then for that fourth wave, we continue to have these levels, 44.76, 45.38, and 45.84. Now, where can't it break? Right there. Let me get that lined up. It can't break 45.72. So 45.84 out of the picture. If it breaks there, then I'm being left with three waves down and I have no idea what it's doing here. I would figure it out, but that's why I just really do not expect it to get up that high. I truly would not think that it should go above here. We have too much, I think, downside pressure on the markets once we start getting back to taking a look at like, what do we have to look forward moving forward? That the Fed is going to start raising rates and they're going to start in March. We got a pass on the January, but that didn't say we're not going to do it. They said it likely will happen in March. With the latest figures that did come out on Friday, we now have an inflation number at 7%. So it's gone up even a little bit more over the previous, which caused this ruckus about we need to start tightening, we need to start tapering, we need to start doing all these things that the Fed mentioned. Now we're getting more indications that you better start because inflation is going to kill a lot of corporate and personal people having the ability to have that money. And so things are going to get tight. So do we want to continue to delay that interest rate pain, if people want to call it that? I don't personally. I think that we need to step in and we need to take care of things. And if the market wants to interpret an interest rate as being bullish, well, so be it. So be it. But I think in the interim, we likely need to go down and finish this first 5 down and then get a rally, which could coincide with everybody's return to bullish figures. We still have the larger companies coming out next week. So we have on the first, we have AMD, we have Amazon, Facebook, Google, all next week. So between Tuesday and Thursday, we've got quite a few of the balance of these, the big guys coming out, including PayPal. And I could go over and start looking at some of the other larger, like Adobe and other companies that would be expected to report next week. So that with the upside scenario now covered, if this is 1 of 5, this is 2 of 5, we're looking for the downside to continue. And we'd be looking for it to come down and break below that 4, start to provide a little bit of acceleration to the downside, break below the 8, which is sitting, this is your hourly moving averages at 45. And excuse me, let me just open this up. I did get a request to do that so that it'll make things clearer. And so here we have the 200. Here's the 4. That's what it's trading off of right now. It's sitting and it's trading and triggering right off of that 4. But continues to hold it. Technically, it is a buy. So they may still try to get it above this. We still could be, but I can count 5. 1, 2, 3, 4, 5. Or it's 1, 2, 1, 2, 3, and this is a 4 and a 5, a 3, and then an additional rally on top of that. Yet to be seen. So we still can have an upside move and be up there when we return tomorrow morning and begin our regular session. Downside is that this did complete the minute 2 of minor 5. We break below the 4, we break below the 8, we have the 20 sitting at 43.62, and the 50, come on, tell me what it is, at 43.53. So between 43.62 and 43.53, if it starts to break, it's going to bring in acceleration. That's what my expectation would be, because it's breaking the moving averages and it's pushing value lower. And so it's going to give more support to the sellers picking up the steam and coming in and selling. And then we do have support at 43.37. So we got a little bit of a zone there that could provide a pause in the whole decline. But I would be expecting 43.19 to be broken. I would be expecting 42.63, 42.42, and then that previous low of wave 3, which is at 42.12, 43.13. I would be expecting that this third wave, so this 3 of 5, to take all of that out on its way down. Now, what are downside expectations? Not saying this is all going to happen tomorrow, but a 100-point move brings us to 43.11, brings us down to these areas. So again, depending on what actually comes in tomorrow, how the market wants to interpret, how things start to pan out, it's not looking real positive as we go into the second hour of globex. But yet again, we still have not gotten the Asian markets, nor have we gotten the European markets, nor, I just think we're just trading. That's what's happening. We're seeing the buyers rush back in, we're seeing the sellers pushing back out, and that seems to be what might just be going on here for a little bit. So that would be expectations for tomorrow, and expectations if we start to break, we're looking for acceleration to bring us down. Eventually, I would think that wave 5 and this initial 5 waves down could complete at 41 area. 41.17 is support, 618 support. That's where minor wave 5 would be equal to 62% of minor wave 3. But then we have additional 40.71, 40.28. And actually, yes, the market could continue to go down, where wave 5 would equal wave 3 at 39.15. Those all remain alive and in the picture. So right now, they're deciding they're just going to push. They're pushing everything back up. We got somebody coming in and buying, not sure what the deal is, but that's what they're doing. And we can see that they're now pushing us back above 44.11, 44, we're up to 16. So no, above 44.14. So that was resistance. We've now pushed back above it. We just got to let the market be the market. So that's the downside scenario. We have the upside scenario. Ultimately, folks, I still believe we still have a minor 5th wave to go. So I'm not expecting it to start to break above 45.84 and just keep going. I actually don't see that right now. Stranger things have happened, but that would be not what I would be expecting. I am expecting a continuation to the downside, and we start to break down, and we get ourselves down here to complete this first minor degree 5-wave decline. Then we'll put in a more sustainable, powerful rally, not to new highs, but as a recovery off of what we just did. Okay, that's where I'm going to leave it. So continue to trade smart, use the moving averages, use the Fibonacci, use the price action. It's all there. Keep an eye on it. Get your mindset wrapped around, block out the external noise, even if it's coming from within. Try to block it out, keep your focus, have your trades in mind, know where you want to enter, know what your risk is, know what your exit and your stop levels are going to be. Trade smart. Next update, Monday, the 31st.